It's an odd day. Oil prices are down, equities are up. That function makes sense. Bonds are modestly bid as well, and yet nothing has fundamentally changed in the Middle East. If anything, it gets worse. What is going on? What is the key catalyst right now? Is it the fact that there is a bit of oil that is getting through Turkey from Iraq, or is it the chip story? Is it semiconductors? This is what's happening in Korea and Asia.
I think in terms of some of the upside we've seen for equities today, I think, yeah, definitely part of it is the stabilisation that we've seen in oil prices. Underlying earnings momentum does remain relatively strong. And we're also seeing the market just become a little bit more immune to some of the developments in the Middle East. And this is allowing traders, to re-enter kind of some of their favourite trades we've already seen in 2026. Because let's not forget, it was already a relatively bullish equity backdrop before this. I think the source of concern for me is, just how long energy prices do stay high. Because even if they need to really come down. Because if they stay high, and they're still significantly higher than they were pre-conflict, and there's energy implications from a macro perspective, they'll continue to compound on themselves. And that will begin to show up in the data, and that could refocus minds. And like I say, we're not really too much closer towards getting an off-ramp to reopen the Strait of Hormuz. We've still got Iran attacking energy infrastructure in the Middle East, and we've still not really got a clear timeline of what the US is looking to achieve here.
And so in the mix of all of that, we get a Fed rate decision, Adam, which I'll point out as a sort of public service announcement. Of course, in Europe comes an hour earlier than we are used to, so we'll be alert to that. But what is the big picture expectation that you have going into the last Powell press conference? Probably. I mean, we don't really know how the confirmation of his successor happens.
Yeah, so I think, obviously with the Fed, they've got a dual mandate, so we're looking to see how they balance upside inflation risks, the downside risks in the labour market, and kind of how that exposes itself onto the dot plot. In terms of short-term trading opportunity, a lot of attention is on, do they keep that one cut or do they remove it? But, what I would say is that at the best of times, those dot plots have relatively limited predictive power. And, given that we're going to see a lot of messaging about how uncertain the Fed is about the path ahead, those, dot plots will have even less consequence. Particularly when you consider that ultimately this was a bit of a lame duck Fed. They weren't expected to cut until later in the year anyways. And then I think, when you consider the market's already moved quite a fair bit and done a lot of repricing for the Fed, I don't think there's going to be too much traction in the market. Ultimately, the Fed is doing what we're all doing, and that's waiting to see how events play out in the Middle East.
When you look at the European central banks, the ECB, the BOE reporting as well, deciding tomorrow. Are we on Wednesday? Yeah, tomorrow's Thursday. Is it that markets are bound to be disappointed? Is it that central bankers just can't be hawkish enough?
Yeah, I think, what we saw since the onset of the conflict was this really mechanical relationship between rates and energy prices, where we almost trade them on basically a tick-by-tick basis. And a lot of that was, a clamour to kind of reprice a rerun of the 2022 Ukraine playbook. But, as we've discussed previously, labour markets are a lot weaker. That dampens the chances for second round effects. Policy is already more restrictive, and some of the rises in energy prices have been a lot less disorderly. So I think, markets maybe got a little bit over their skis, and we'll kind of see that be brought into focus with central banks this week, who will also be attuned to the negative growth implications.
Okay, Adam, Linton from our Bloomberg Markets Live team, thank you so much for that. And remember, you can get up-to-date analysis and insight from Adam and the rest of the team by going to MLIV Go on the terminal.